What is going to happen in 2024 with house prices and interest rates, rent, and the economy? Being in the mortgage industry, I receive the forecast from all the major players, so I am going to share what they are saying. Now, obviously, no one has a crystal ball, but here's the lowdown. So, the last 18 months have been defined by a cost of living crisis and a slowing economy. But there is some hope for 2024. Inflation has slowed and the economy hasn't actually slipped into recession. 2023 was a year that tested the resilience of Canadian mortgage holders. And as we look forward, there is optimism that 2024 will be the year of rate relief. While mortgage delinquency rates have risen slightly from their record lows, borrowers have largely proven resilient so far. Falling interest rates in 2024 are also expected to support a rebound in home sales and prices, but forecasters differ on what those rates could look like. The consensus seems to be that home prices will gain anywhere from 0.5% to 2%, and we could expect the 5-year fixed interest rates closer to 4% than the current 5% by the end of the year. Variable rates are also expected to decrease by about 1%. Some say the central bank should start cutting as early as the January meeting. Most recommend the bank get at least one cut under its belt by June. By the end of the year, experts recommend the Bank of Canada get rates down to 4%. Over the next 2 years, another 2.2 million Canadian households will be hit with significantly higher mortgage interest rates. That statistic alone should help spur the Bank of Canada on to start cutting interest rates in the first half of this year. While the Bank of Canada will probably be lowering rates in 2024, it might still be lowering rates even further into 2025 to help offset some of the pain that will be coming from those mortgage renewals. Many households will need to rein in spending amid the higher rates at renewal, but the mortgage stress test should have provided the necessary buffer for defaults or forced sales. Canada's economy has stagnated. It hasn't grown at all in 2 quarters. Heading into 2024, the concern shifts from inflation to the potential for a recession. With the costs of living still increasing too quickly and the growth subdued, the next 2 to 3 quarters will be difficult for many. More pain is coming. Even the once resilient Canadian consumer has slowed and become more cautious as the economic pain drags on. The cracks that are starting to show up in Canadian consumer spending behavior and finances are expected to gradually get wider. Canada's economy was bolstered by historic population growth last year, but when you adjust economic growth on a per capita basis, the GDP numbers look even worse. And the economy still hasn't absorbed the full impact of all those rate hikes. The Bank of Canada says that usually it takes about 18 months. Some forecasters are expecting the housing market correction will come to an end in 2024. We haven't felt much of this in Saskatchewan, unlike the larger centers, but when that bottom hits and how fiercely home sales and prices rebound is a question dogging some Canadians who continue to grip the sidelines of the market. There's pent-up demand in the housing market, and Canadians are looking for confidence that the price correction is over before they come off of those sidelines. When interest rates start to fall, it may be enough to convince Canadians that the home that they buy today won't be worth less tomorrow, clearing a path to get back into the housing market. The central bank's policy rate could act as a barometer for the Canadian housing market in 2024, with forecasts for interest rate cuts potentially lifting some of the pressure off of the would-be buyers. An early in the year decrease to rates may result in activity to pick up ahead of the traditionally busier spring market. Rate decreases might incentivize some buyers to jump in, but high borrowing costs overall will likely continue to subdue home buying in the first half of 2024. Buyers won't come back in droves until there's been meaningful improvement in the cost of borrowing, namely multiple interest rate cuts. Affordability levels will continue to restrain first-time home buyers, in particular, until there are multiple rate cuts to lower the barrier to qualify for a mortgage. Another factor impacting housing affordability is lack of supply. Supply in the housing market is continuing to grow in early days of 2024, but the pace has not been in line with what Canada needs to restore affordability in the market. Most don't anticipate that sellers are going to list en masse under the weight of higher mortgage rates at renewal, so we likely won't see a large increase in supply for that reason. An eventual easing in borrowing costs could help to not only spur activity in the ownership market, but also relieve some of the pressure that's been building on the rental side of the equation as more renters buy and their vacated units come back on the market. Employment is no longer the driving factor between intercity and interprovincial migration. It's now become the cost of housing made possible by both the high variances in the value of homes in different areas, but also the technology behind virtual work. What should we expect in the rental market? As much stress as homeowners have had to bear when they renew in Canada's higher rate environment, those outside the ownership market have also been subject to spikes in rent over the past couple of years. Renters' inability to break into the ownership has been worrying. A surge in demand from newcomers who tend to rent before they buy, a lack of adequate housing supply, particularly in major cities, and higher borrowing costs has put a cap on how many households can afford to leave their apartment behind for homeownership. Immigration levels are projected to ease mildly over this past year's record level, but still stay strong, which puts a floor on the demand levels. Once ownership affordability improves to a certain extent, the natural flow up the housing ladder will reassert itself to a certain degree, and that should bring a little bit of relief on the rental side eventually. It's always a bit of a mixed bag, as these are the best guesses as to what might happen. What are your predictions for 2024? Are things going to get worse before they get better? Or have we seen the worst of it?